something. You won't go through the distribution phase really quick today. 1 sec, just give me 1 sec. I'm going to make sure I'm going to cover, and then I'll go one more here. Okay. And we'll go talk about this, and that will end up, and then you guys will read the homework. Okay, so let's start class. JC, you have this one recorded. We're on Bloom Plays today. Okay, taping is on. Okay. So this is part 2 of volume analysis. This is week 6, hypothetically. This is the 6th class out of 15 weeks, and I'm away. So let's review what we spoke about yesterday. Okay. You guys can hear me, right? How come I don't see anybody? TJ, you're not posting. I don't see anyone posting. Okay. So
I'm here.
Okay, good. So accumulation, we talked about. We talked about support, right? Support never breaks, correct? We talked about the importance of the market maker. Market maker accumulating shares, buying shares at support, correct? This is important, correct? Okay, so the question that people always ask is, how do we know the market maker is accumulating the shares? Okay, the quickest answer is this. The stock is tanking. It just dropped 20%. Who on earth can start to buy with enough volume that could hold the price up? Other than the banks, the institutional buyers, or the market maker. The term market maker is often misused, right? There's 2 kinds of market makers. There's 2 kinds, right? There's the one that are also called exchange specialists or something. They work on the New York Stock Exchange on the floor, and they have all the inventory. Okay, that's one type of market maker. Okay, they're making the money on the bid and ask spread. You could Google this. There's 2 types of market makers, right? Maybe you should Google it, actually, market makers and market makers, correct? And the other one are the banks. Goldman Sachs, JP Morgan, Deutsche Bank, UBS. These guys are also market makers, right? They're making the market for their client. They're buying shares for their client. They're dumping shares for their client. Got it? Wait, here is Citadel market maker, right? Okay, so I believe that Citadel Securities is the world's biggest market maker. Just so you guys know, for interest sake, they hold the most inventory. They will walk into the market, buy all the inventory for a stock, and they will make money on the bid and ask. They will buy it from you on the bid and sell it back to someone on the ask and take that spread all day long. Can you beat the market maker? No, you can't. Okay, so that's Citadel. Okay, let's talk about one thing first. Low volume. Okay, this is a special treat that I'm going to teach you today. So here's the post. Here's the circle. I'm going to talk about this first. Okay, you will read the post there. Later, you'll come back and read the post. For now, focus on the chart. Okay, here's the chart. See the bottom line there? That's green, support. See the red line there? Top, resistance. What is the area I just created? Accumulation. This is just like the Wyckoff method. This is accumulation. I figured out that this is an area of consolidation. This stock is consolidating here. It's forming a base. There are buyers in this area, correct? Kind of. See that blue circle in my green circle that I just drew there at the bottom of the volume? There are buyers there, but not a lot of selling pressure is the key. That's key in this picture. You have to notice something. Selling pressure. Are there selling pressure? No. Great. Are there buyers? Are there buyers? Yes. Is the volume low? Yes. Who cares? Why does it matter if the volume is low here? Does it matter? Why is the importance of low volume? What really matters is the selling pressure. There's no selling pressure to keep the stock down anymore. We've figured that out. Okay? Someone's snoring. Do you guys hear that? Okay, wait. Okay. So you guys see that the volume there that I'm circling in the blue there in the green circle? What I'm noticing that there's buyers there, but the lack of selling pressure. Okay? Right there, those 2 days. Okay? That's important. Low selling. This is called uncrowded markets, right? There's no volume. Okay, so as it moves up, let's study here the volume here. Let's just study this volume here. Some selling pressure comes in. There's people dumping a little, but what happens? From those candles that we learned, from those candles, buying pressure. This stock isn't tanking anymore. This stock continues to hold even when people are dumping. Is that important here? People are dumping shares, but the stock continues to hold its price. What does that mean? If 20 people sold their shares to me, that means there's an equal amount of buyers who's stepping in to absorb them. Absorb them. Okay? This is a key word here. Absorption. Okay? This is actually written in the Anomaly book. If you search for this word absorption, it shows up multiple times in multiple areas. So you need to go back, and if you missed it, you need to go back and say, okay, what does absorption mean? Superbloom talked about it. I get it now. Okay? This is just like the cycle. No more selling pressure. And what happens here? What is this candle here? It's in the book. What is this candle here that I'm pointing to? This is the test candle, right? Test of what? Testing of demand, right? Is that what it is in the book? What does it say? Test. Let me get the language correct here. She's testing the market. Right? She's testing the demand here. Okay, this is the supply test from the book. Right? Here it is. This is the supply test. Am I not? Did I? This is the supply test, isn't it? From the book. Testing the market. The test. Low volume. I'll look at on the left. Previous area of heavy selling volume. Heavy selling volume. Is that candle the same picture as this one? Yes. What's happening though? We learned that this is a hammer with buying pressure, right? This is a shakeout candle. Why does the market maker need to test the market from the book? Remember, the market maker has accumulated all the shares. There's 100 million shares he just bought, all of them. He wants this to rip, but he does not want this to tank as it goes up. So he needs to figure out if anybody else has shares in the market. So that's why he tests it. He moves the price over resistance. As it moves over resistance, he looks at the volume and says, okay, nobody's dumping. No one wants to sell anymore. Logically, nobody wants to sell anymore. What happens next? It rips. Is that not what's happening in this picture? This is you guys agree? You guys like the logic there? This is explained in the book, right? This whole entire picture is accumulation, sorry, with the test candle in hand, the low volume sell off, right? Focus on the low volume sell off here. Look, nobody's selling here, and then it rips. Is that right? This is in the book. Test this. I wanted to go over the testing in the market. Now okay. So the question is now usually is, does it have to be a hammer? No. This candle could be any shape or form. But what we need to figure out is, as it climbs over resistance, As it breaks over, this is where people go, is this a false breakout or I get shaken out? Remember, sometimes when it's about to rip, you dump 5 seconds before it rips. Why? You think you just do that? The market maker is shaking you out because you're going to come back and be that exact same bag holder that's going to push the stock down. He doesn't want you to sell when this is ripping. He wants you to sell right here, right now. Does that make sense? So this is going to shake you out. You're always going to watch this. Over the break of resistance. Now, does the logic work with trading? As it breaks over resistance, is there volatility there? Does it move? Like if resistance is at $5, does it go 505, 504, 502, 449, 447, 446? Why does it do that, do you think? Why doesn't it just go $5, 505, 510 and just go straight up? That'd be too easy. There's too many players in this market. The market maker is shaking you out, and he does it in the testing the supply candle in this setup, in this way. And the candle does not have to be a hammer. It just has to be low volume is key. Okay, low volume, important. Okay, so that I've gone over the test candle now in that chapter. I knew I was missing that. What else can I say about that? It's practice. And when you're swing trading and it's about to break over, yes, you might have to look at it. When you're day trading and it's moving too quick, does it matter? You just have to have the wherewithal in your brain to realize there is going to be a moment where the market maker is going to shake you down. You're a retail trader. You have $500 in your account. He's going to shake you out. The second you loaded the boat, you're like, guys, he's going to shake you out. And you're like, then you're going to be the guy that goes, oh my God, I sold you early. And I'm going to say, remember that chapter in that book? Okay. So that's that. Good example, right? I like that example. Oh. Okay, so let's hammer. I can remember and read what I wrote there as well. Like go back later. Okay. Go back later and read that. Okay, so here's another low volume explosion. Okay, remember you could Google this. It'll show up on somebody's webpage. I think this was I forget, trading strategies. I don't know. You could Google it and then you find it. So this chart here, Rito, it was an IPO. See that blue circle at the bottom there, that hammer? See how it's tanking all the way down? See how it's tanking all the way down? Selling pressure all the way down. I think this is a daily chart. Selling pressure on the way down, hammer. What's that? Buying pressure, right? From the candle, buying pressure. But what? Look at that volume there. It's so low. So low. What does that so low mean? We know from the candle that this is buying pressure. We know that the volume is low. Why? Because nobody has any more shares to dump. They don't want to dump anymore. Is that right? They just don't want to dump anymore. If they couldn't dump yesterday and they dumped before, why are they just going to dump now? Like logically, they just can't. I'm just teaching you logically. Like, why would they dump? Buyers start to step in. Buyers start to step in. Buyers start to step in, and this continues to move up. So the low volume hint to explosive moves. Do not underestimate low volume. When you're studying your chart analysis, you have to understand buyers are coming. Buyers are coming back. Yes, the stock is going to move up. Selling pressure is reducing. There's no more selling pressure. This only can go up. Okay? Does that hammer home the low volume? Do not ignore those concepts. And if you wanted to learn more, you can Google it like I did. I Googled these. Okay? Just like my other picture, low volume hint. Okay? What else? Okay, that. Okay, so we're going to talk about validation. This will probably take 15 minutes here. Chapter 6, principle number 6. Okay, so this is important. Let's just go through it really quick. Okay, validation or anomaly. Basically, and this goes to law number 3, effort versus result, right? It sounds confusing, but it's not. If the stock moved up 100% today and the volume is 20 million shares today and the average volume is 500,000, there was enough effort to create the result, right? The average volume today, the average volume for 200K, 20 million shares pushed it up, 200%. Yeah, this is validated, okay? That makes sense. The average volume is 200 shares, 200,000. This thing moved up 200%. You looked at the volume. Only 200, only 500 people bought. Is that validated? Are you going to go back into you're going to call your wife and say, honey, look, I think this stock is good. I bought the stock and I saw it rip. You know what's happening here? Somebody keeps buying the price, hitting the ask with low volume up and up. Could be one person, could be two people, could be four people. Here's the logic behind it. If 5 people in the market is moving the price up, does that mean the entire market believes this is true? This is not true. This is not happening. This is what volume validation means. Does the effort support the result? Okay? And in the book, volume can only precede price if volume validates price. Maybe I should write that down. Volume can only precede price if volume validates price action. Okay? And yes, you guys will make fun of me. I only know how to read volume. I don't know how to read any other indicator because other indicators can't tell me the future like volume can. The rule is volume precedes price. Okay, so let's look at the examples that she has in her book really quick because those are the best examples I find. Okay, so here's the examples of volume validation. Like I said, here's the first example. Big move up, high volume. Okay? Look at this. Big move up, high volume, validated, widespread body, wide range. Okay? Okay, look what's happening here. What's the next example? Volume validates price action, low volume. Look at the average volume line, narrow spread. Is that right? This thing moved up 3% because only 4 people came out to buy this ticker and it was way under. Okay, yeah, validated. Yes, validated. That means what? What's the logic here? No one is interested. No one cares about this ticker. And if they are buying this ticker, they must know something. Look, they must know something that we don't. Right? Is it still worth watching? Yes. Is it do they need more buyers? Yes. Because if you buy it tomorrow because you think they know something and you buy it, who's going to make the price go up? No one, because there's no volume. Right? There's no volume. There's no buyers. Okay, so examples of anomalies, right? This is her first anomaly here. So this is like, let's make this clear. I might not have an example today, but from her book, look at the example here. Example of anomalies. Look at this. This thing went up 200%. The volume is what? Below average volume. Is this validated? No. Okay, so you will go back and read this section. And the reason why I am emphasizing that way is because the anomaly is a powerful tool here. Okay, and she writes it in her book. What does she say? What does she say here? Something is not right here. Something is not. And then what does she say in the next sentence? One question is, why do we have low volume when we should expect to see high volume? Look at the question. Is this a trap up move by the markets or the market makers? Is this a trap? Huh? I know. You guys are like, holy shit. I read the book like Super did, but I don't understand it until now. Right? Is that right? Okay. Okay, let's go to the next anomaly. What's the next anomaly from the book? What's the next one? Does anyone know? Oaks, do you know? Did you do the homework? I'm kidding. Okay. What's the other possible one? The other possible one is the spread is narrow. This thing moved up 2% only, but the volume was so high, the volume went through the roof today, but the thing went up 4%. Is that a problem? Read what she's saying. Is this a potential trap? Where do you think this is? Where do you think this might show up here? For the sake of argument. Near the top, right? Near the top of a chart. Where do you see this narrow spread body with high volume show up? Usually at the start, at the top of a chart pattern, right? And it signals what? Weakness, correct? But why is the logic though? Look at this chart. I'm just look for the sake of argument, right? Look at this. For the sake of argument. Those dojis, are those dojis narrow spread candles? Low range, like the range is small, it's tight? What do you think is happening there? There's an epic battle between the bulls and the bears. The bulls are trying to break over high of day. Millions of shares are coming in. What's happening here? Billions of shares are trying to tank this down, shorting, panic selling, FOMO. That's why there's so much volume there. Is this an anomaly? Yes. Is this a potential trap? Is this a first sign of weakness? All in the book. Hell, this is heck yes. Okay? Oh my God. Or where does it also show up? What's the other example? Bottom of a bearish trend, just like the book says. Okay? Bottom of a bearish trend. Is it possible that you see a doji at the bottom of a chart? Yes, we talked about this yesterday. Remember my examples? Right? Here's the bullish doji. I'm just look at the volume here. I'm not even making this up. This is somebody else's picture, actually. Somebody is a genius. Look at that doji. Look at that doji that shows up here. Look at that volume that comes in. Is this an example of anomaly? Of course, yes. Something's happening here. A reversal is imminent here. The trap. Is it a trap for the bears or the bulls, which she's talking? Is this a trap for the bears or the bulls? The bears are going to get trapped. They don't know what's about to happen. They're going to get squeezed here. They want a short here, they're going to get squeezed. Buyers are coming back on this short range candle. See, okay? So is it clear now what the anomaly is? And here's the rule for the anomaly. I personally use the anomaly on the 1 hour chart. Okay, I was first a swing trader and I studied the hour chart. It gave me enough information to study it. You guys can look for anomalies at any other time frame. Anomalies can show up anywhere, but it's a first sign of weakness or strength or potential trap or a reversal is coming. Usually a reversal is coming, right? Something is coming. It's no longer clear. There's a reason why there's all of a sudden an epic battle and it doesn't match the price action. Okay? Okay, so here's the example again. Let's just go through it. I have some time here. This makes sense, this chart, right? Look at her chart. Makes sense. This is rising momentum, increasing volume. Makes sense. Okay? This also makes sense. Like, this is also makes sense. Rapid, right? Decrease of price action, increasing selling pressure, right? Increasing selling pressure, right? She's saying that. However, she goes to, she goes, look at this. Look at what she's saying here. What is this? Look at this. Do we see this? Look at this. Let's compare it really quick. Rising momentum, but decreasing volume. What's happening here? What's the big chart? What's the last candle? What's the last candle? It is a anomaly, isn't it? Something retarded is about to happen to you. A bag. You could see this in the volume. Is that true? Is that true? Did I lose anyone? Somebody go on the mic and say, did I lose you? I lost you there. Is it clear? There's a reason why. How come ABCD on StockTwits alerted this? I jumped in and I'm now holding the bag. It's because the price moved up 30%, but only 3 people bought it. Him, the guy who bought it, the guy that alerted it, and you. Is that right? Is that right? I didn't even jump in because I said there's no volume here. Why the hell? get in. Chances are I'm going to get stuck. Okay? Okay, what's this one? What's the other anomaly logic here? Same idea. This thing is tanking. This thing is tanking, but the volume is decreasing. The selling pressure is fading in a downtrend. Right? Fading. The selling pressure is actually dropping. This is going to turn around and go back up again. But you can spot it in the anomaly. Is that right? Is that what she said there? Let's see what she says there. I can't find the right word, but I'm pretty sure, I'm almost 100% sure that this is a signal of a reversal. We're talking about the price action is tanking so much, but there's actually no volume to validate this. The tank was not validated. It isn't supposed to go down 20%. Only 3 people dumped. It wouldn't make sense if this doesn't continue up, reverse. Okay? Okay, so that's that. We talked about accumulation. We talked about anomalies. Are you guys confused by that logic at the end there? You guys are. This is the same idea. This thing is tanking. Remember this picture. Okay, this is validated. No, wait. Just reverse your logic here. Look at this. Just compare them. Look at this. It's one is tanking with a ton of selling pressure coming down. The other is tanking with low volume. One is validated. The picture at the bottom there between the two, right? Selling pressure is increasing here. It's tanking hardcore. It will continue on. The first picture, the picture on top, it's tanking, but the volume is actually decreasing. Only 5 people was, how come 5 people were able to dump this 50%? They couldn't. Somehow they did, but they shouldn't have. So this thing should be bouncing back. Right? Is that what she says there? I just wonder, I forget the wording that she uses. 1 second. Okay, 2, 3, 4. Oh yes, there. There it goes. There we go. I found it. I knew it. So I'm not making this up. I'm a genius. Okay, look at what she says here. She says in this the candle 4, 2 anomalies again. Look at this. The volume should be high, not low. Second, we now have falling volume over 3 candles in the market that is falling. Again, this is an anomaly, as we should expect to see rising volume in a falling market. Oh wait, did that answer that question? Oh yeah, okay, no, that's right. Okay, here. That's right. So because you will get confused here, so I'm going to spend a little time. Right? Okay, look. So here. So read this, and in between, if you read this part, the market makers and the specialists are starting to struggle here. They're losing momentum. They're losing strength to push the stock down. The buyers are moving into the market and increasing numbers, making the stock go up. So we were right there. The logic was right. Logically, that's good. That's a good example of me figuring out logically with like just pure logic. This makes sense. Anna Cooling is telling me, it makes sense what she's telling me. All right. And she actually wrote it there, right? You guys saw me. I was actually struggling to figure out where is this true, but logically I figured it out. And it's logical, right? Because in her book, she says this whole volume studies is logical. Did you say that somewhere? Right? She says that. She says that in a couple areas, actually. Okay, so no, that's good. That's a good example because this is good. It's on YouTube and you guys will learn, right? Logical and common sense, right? Okay, so it's in the book. It's logical and common sense. We figure it out. Yes, we studied the book, yes, but we can reason it out. What the hell is happening here? Okay, so that's the example there. I'm going to move on. Fun. Okay. So let's look at this really quick. I'm gonna give you a bonus, talk about distribution, because TJ and we trade distribution all the time. We short weakness. That's how this is the distribution phase, correct? Yes, this is the distribution phase. We're not gonna spend too much time on it. Let's look at the chart. This is distribution, right? Support resistance, we draw it. Okay, support resistance, it breaks support and it cracks. Right? Look at the volume at the bottom of that picture. What's happening? The buying pressure is decreasing and the selling pressure is increasing. Right? The selling pressure, the selling pressure is coming back. You can see it in the chart. But what's more important here? Look at this picture. Oh my God. Anna Cooling is so smart. She is smart. Look at this. Where in the book did I show you this picture earlier? Where did I show you this picture? I must have shown you that picture earlier. God, I'm smart. Okay, let's put it next to each other because I know you guys are like, what? Did I show you this picture? Is that in the picture? That's in the picture. What did that picture at the bottom I say? I said, the selling pressure is increasing. It's validated by volume. The attackers are coming back they're coming back. They're bringing their family. They're bringing their parents. They're bringing their ex-girlfriends. So it's like, let's sell. The volume is increasing and support is broken. So the selling pressure was validated. The volume validates the price action, and then the volume precedes the price. Isn't it? The rules just follow here. Wow. When I read that book, I didn't even write that down. But when I see it like this, it makes sense. Does that make sense? Is that clear as mud? Oh my God. Okay, next. That was a good example, right? You guys don't give me credit. That was a good example. Put it there for you. Okay. Wait 1 sec. Here. 1 second. Volume, analogy. Okay. 1 sec. I need to go back to the top so I can get you the... Okay, so let's look at this picture. She writes it in her book, like I promised you. She talks about absorption. Okay? She talks about absorption a lot. Look at the top word, absorption. Look at that green arrow. What am I showing you there? So, selling absorb, but look at the second arrow below. I'm pointing to two candles, the red one and the green one. The red one and the blue, the red one and the blue one. Okay, are we looking at the red one and the blue one? Who's not looking at the red one and the blue one? Tell me now so I know that you're not listening. Okay, let's zone in on the volume here. Let's look closely at these candles. The red candle on the left is larger than the blue candle on the right. But the blue candle on the right has what? Bigger volume. The buyers exceed the selling pressure. The demand exceeds the supply. What happens next in this chart? It has to go. If there's more buyers in the market versus more sellers, what's going to happen? If there's 5 buyers and 3 sellers, what has to happen? It has to go up. And this chart, it goes up. Is that right? Okay? Makes sense, right? And you guys are like, why does it have to go up? Well, that I can't help you. Because if there's 5 buyers in the market and there's 2 sellers, there's more demand causing this stock to go up, right? So what's the importance of this one, this picture? Why did I show you this picture? On the left, it is a time frame. I don't know, maybe 5-minute time frame. On the right, I think it's a 10-minute time frame or 20-minute time frame. Okay? I think I wrote it in my notes what the time frames were. I don't remember, but on the left, the time frame is smaller time frame on the left. Smaller time frame, right? The one on the right is bigger time frame, longer. Let's use the terminology right. If you guys, I'm using a smaller time frame. That's wrong. It is called the shorter time frame, right? So let's just write technical etiquettes, right? Don't say smaller time frame. No one in the hell's gonna understand what you mean. Okay. Okay. So on the left, it's the time frame is shorter. What are we seeing here? What am I showing you? The same idea. That selling pressure, that widespread candle is not validated by volume. Not validated. I get that. The next candle over, the buyers are coming back. They equal the amount on the picture on the left, right? Buyers are coming back now. Full throttle absorption of selling pressure, isn't it? Isn't this the case? Isn't this going up? Can't you read the volume and say this is going up? Like common sense will tell you 4 people dumped, but 20,000 people came in to buy. This is going up. This is going up. Why? Volume precedes price. This is going up. Do I need an indicator? This is important here because when you guys say, oh guys, MACD cross, I'm like, loser. MACD crossed because the volume increased. Buyers stepped in. I could see it in all the time frames before even the MACD crossed. Oh, guys, the stochastic crossed. I'm going to take an entry. Loser, because I can see this in the volume. The volume buyers are stepping in on the tape. I can see the level 2 getting crushed. So you could use those indicators, that's fine. But remember, volume is the most powerful tool, leading indicator in technical analysis. Okay? Okay, what's the picture on the right? Longer time frame. What are we seeing here? That hammer, again, with low volume. Remember that example on RETO, R-E-T-O, right? I showed you that example. On the left, you could see the breakdown, the psychology of this market. The market is moving this way. The right, we see a hammer with low volume. Do you see how I'm piecing this together for you? I'm piecing this together. How is it that we see this hammer show up with low volume, that this continues up? This actually, interestingly enough, it goes up multiple times, right? It continues upwards. Even the doji here has low volume, right? So the low volume explosion. But what's the logic that we can say here? Well, that's implanted without even looking at the chart, like the candlesticks. The selling pressure was low. There's no selling pressure here. That people dumping are panic selling at resistance. They are getting shaken out by the market maker. Gotta be. Who else is shaking them out? The market maker. The market maker will move the price 10 cents. Oh my God, I'm gonna use my stop loss. It's so tight. I'm gonna blah blah blah. I have to go take care of my son. Doesn't matter. You're shaking out anyways. The market maker knows that. Okay, the market maker is made to trick you. Did I post that article? That thing. The market tricks are revealed, and the standard market moves also revealed. Okay, I'm just gonna use that example. So good. Okay, you guys don't believe me. I don't know what EA means. Okay, powerful and effective tricks. Okay. Okay, right there. No indicators, no EAs, and I don't know what that means actually. The price and volume analysis, simple, powerful, and effective. It reveals the true activity within the market. The market sentiment is revealed. Market tricks are revealed, and the extent of the market moves are also revealed in the market, in the volume. It's got to be. Okay. Okay, did I lose anyone there? That hammer example, you guys are good with that hammer. That's the absorption of volume. Okay, we talked about that yesterday. You guys can go back. She has multiple examples of volume absorption. It's actually really important in volume absorption, right? Okay, look. Here, I'll just pull up this chart, IMNP. Look at this chart, IMNP. Look at these last 2 candles. I'm just going to pull it up as an example. Is this volume absorption? Is this selling pressure is coming, but buyers are just coming back to attack, to take over here? What happens the next day in pre-market? It goes up. Fine, makes sense. Okay, volume precedes price. I get it. Okay, volume absorption. I kind of get that. Okay, so let's look at the other part of it, right? Let's look at what happens the next day. Look at this, the opposite. Look at this on the left. Look at the volume bar. Selling pressure. Buyers are stepping in, but not enough. Buying pressure is being absorbed by the sellers. Buying pressure is being absorbed. 5 people want to buy, 30,000 people are dumping shares on them. How could, if you're a bull and the bears are shitting on you, are you going to buy in that? Are you going to buy in that territory? No, you are not going to buy. You're going to have to wait for the bears to go somewhere. You're going to have to wait for them to leave. This is just volume analysis, right? You guys don't, okay? Just like this example here. Just, okay, and that's just logic. That's just logic of trading. Okay, look, so what's happening here? The buyers are losing power. The bulls are leaving the market, and the sellers come back. This thing tanks, right? Remember, distribution. This thing tanks. Are you guys getting this? Right? No. Okay, you guys are understanding what I'm saying here? This is logical. You guys are actually thinking now, because I want you to think that, wow, this is actually easier than I thought. Okay? So before I leave, wait, do I have any more to teach you here? Okay, so I'm gonna go through this big example. Okay, but I want you to learn. I want you to understand something that I'm teaching you. You might be thinking like, wow, you know, the volume spread analysis, the volume price analysis was complicated when I read it, but it's not meant to be complicated. This is logical and common sense. This is easy. Okay, this thing is easy. All right. So what I'm trying to teach you now is this is easy. Technical analysis is easy. You could learn this in 15 weeks. You can learn this in 4 weeks. You can learn this in 2 weeks. But what happens in trading tomorrow is that once you get an entry, here's what you're going to realize. Here's my last tip for you before I go through this example, okay? I got the buy signal. Me, TJ, Superbloom, Vegas, we bought ABCD at $3. But what happens next is unpredictable. Okay, it's all up to psychology. It's all up to emotions. It's all up to how the stop loss for Vegas compared to Super's compares to TJ compares to yours. TJ has $1 million account. Super has a $500 account. Vegas has a $30,000 account. I have a $3,000 account. Right? The psychology after the trade is what everyone screws it up. And after the trade, nothing can help you. Once you enter the trade, it's all emotional now. It's all, should I stop out early? Should I take profit? You guys don't, because look, think about it. Once you're in the trade, do you care if the MACD is going to cross? Really? No, we're worried about other stuff now. You're worried about, does it break the EMA? Does it break resistance? All this other stuff, right? So what I'm trying to say is this volume analysis stuff, it's easy. And I make it look easy. And you have to make it feel it's easy to do. It's logical, common sense, just like the book. So what you have to learn is put this all together and come up with your trading psychology after you get into the trade. That's where all the money is made. You could take an entry, but all the money is made is how you think and what you do in the trade while you're in it. Okay? That's inspirational, isn't it? I'm kidding, I'm not. Okay. Okay, let's look at this example here. BI. I think this stock ended up ripping from 196 to 230 the next day. Pretty sure it did. Yeah, it did. 230, 240. And there's a couple other people who pumped it. I alerted it, but I didn't pump it. Everybody else jumped on it and then said it was theirs. It doesn't matter. Okay, so what happens? Let's look at the picture on the left. And this is, I'm going through the multiple time frame analysis. Oh, multiple time frame too, okay? Okay, this is on the daily chart. We see the, okay, look at that on the left. Okay, buying pressure near congestion, near an area where there was some right? Near an area where there's activity in the past, correct? Okay, that's the buying pressure. That's the daily candle. That's the first thing I'm noticing. Candle, I'm like, the daily chart, I'm noticing what? Tank, buying pressure coming back in this area. I'm looking at the volume. Look at the volume now. I'm not circling it. Look at the volume at the bottom. Is that validated? Is this move validated? The buying pressure is coming back. Yes, the buying pressure. Got it. Right? What's happening here? And then I break it down to a shorter time frame. Study the volume. This thing bounced off support exactly. Okay, let's zoom in on that picture. Okay, is this the same picture as yesterday? I'm not gonna put it up to save time, but these three candles, let's say. These three little candles here. Is that those three candles? The one on the left, the little one on the red, say maybe two little, and the green one. Is it not like the pivot candles? Here, actually, you know what? I'll pull it up. You guys are probably okay. Is it like this? Is it similar? It's not exactly the same, but is it similar? The similar setup here? It has to be similar. It has to be similar. It's small, I know, but I don't know where that chart is. It's small, right? It has to be. Why does it have? Look at the candle on the left. It tanks. Look at the candle on the left, the bottom there. Look at that candle on the middle one, the doji one looking one, the middle one. What is that? That's the narrow spread with a big volume coming in. That is a anomaly, right? Just like the book, just like what she's trying to tell me. And then that blue candle is like the green bar, right? This is the first indication of accumulation. This must start to accumulate here. The market maker stepped in and said, holy cow, this can't go down anymore. I'm going to start buying here. The question is, some people usually ask, like, how come the market maker buys? Go call the hedge fund in New York. The guy there who's moving $10 billion. He decides when this stops. Okay? He's the market maker. Goldman Sachs. Okay? And then I break this out into the multiple time frame stuff. Okay? So here's the multiple time frame. Like this is a shorter time frame. Shorter. Now I'm seeing the spread. I'm seeing the full on what's happening here. Look at the picture. Look at the volume on the left at the bottom. At the bottom, the volume on the left of that blue circle. Selling pressure, right? Selling pressure. Yes, selling pressure. Support not broken. Is support broken there? Support broken there? Okay, support not broken. Maybe support was broken there. But hey, let's assume the support never broke. Okay, let's say I drew the line. The line is supposed to be lower. You guys getting this? The line was supposed to be lower. Maybe I drew the line wrong. Doesn't matter. Okay, so the line should have been right there. Doesn't really matter, does it? Support is not broken, right? The green line is the support line. It never broke support. Selling pressure on the left, and then all of a sudden it bounced off support, and what? In that blue circle, buyers. Is that right? Buyers are coming back. Am I doing anything special here? And is that volume bar with a ruler or with a string or with a piece of floss? No, I'm not. I'm just saying, look, buyers. I don't see any sellers. I don't see anybody. Do you? No. So now what do I wait for? The buying climax, right? Like the book says, I figure that this is now I'm waiting for the buying climax. Okay? Now I'm waiting for this to happen. Near what? Resistance. Correct? I'm waiting for this to happen. Why does this happen? Look at those candles. I already explained this to you yesterday and many weeks ago. These are buying pressure candles. Buyers are stepping in with volume. Look at that picture closely. Look at the volume at the bottom. Buying pressure. Look at the volume increasing. Buying pressure. Right? Wait, what else here? I know. Wait, one sec here. Okay, so but what's happening here? We studied this before. If I don't know volume analysis, I know, bingo. This is what? Exaggerated divergence. Look at the picture. I don't care the price action. Yeah, okay, price action is showing me, but I could see it in the volume. This thing is moving upwards, just like that exaggerated divergence picture. Exactly like I drew it in my sleep. And then look at that red, purple circle there. It's breaking over the RSI trend line. Is this thing ripping? Actually, you know what? I know you guys I know I'll just prove it to you one way or another. What day was this? Oh. Let's see. What price is this? You guys don't believe me, right? You guys are like, oh, this guy's a fake guru. Well, I'm gonna show you. Okay, this is the, look at this. Look at this. This is the daily on the BGI chart back in December when I charted it. It tanked. See that red candle on the, it tanked? It tanked, correct? On that red candle, it tanked. Then the buying pressure came in, right? So this day was on November 11th, okay? So let's look at it on the 1 hour. So November 11th. Okay, my thing can't go back that far. Okay, well, BGI. Let me see if I can find it on the. Okay, here it is. November. Is it November 11th? Yep. Okay. So I know you guys will believe me, but I just wanted to, so I could believe myself, right? Does this retrace from this? Look, tank. Buyers are coming in. This thing moves up. This thing actually moves up higher, right? Because I can this thing moves up and then it tanks. Is that right? But I was able to predict that it was going up. Is that right? You guys agree? This is the chart here on those days. Okay? So I think that covers everything in volume. What my tip is now is you guys go back, read the volume book again. And read the examples. So in her second book, she wrote the second book. She wrote the second book with more examples. Okay, more examples, and you guys will have to study it and practice it a lot. Like this is a lot of practice, and it's not a real science. It's an art. It's just like understanding the logic of this markets, understanding the buyers are coming in. Okay, so maybe my thing is, so these are the questions you have to ask yourself. Are buyers stepping in? I like to say stepping in. You guys could say walking in, eating in, dining in, doesn't matter. Are buyers, are sellers stepping in, right? Are sellers stepping in? Oh God. Are sellers stepping in? Are buyers leaving? Are sellers leaving, right? And then buying absorption, selling absorption, right? These are, and then the other last, this thing, buying pressure increasing or decreasing, right? And selling pressure increasing. So it's 6 questions here. Selling pressure increasing, or decreasing, okay? But really when you study volume, when you look at the volume, because there's a warrant here. There's a not the warrant, a merit here. Like I said, like the book says, volume precedes price. If you understand the logic of volume, the sentiment of the market based on reading the buyers and sellers, you could predict the sentiment. Now you're just waiting for an entry, an exit. And now you're just ready to exercise your stop loss, exercise your buy signal, and you're just waiting for confirmation. Now, because you understand the sentiment, you know what's about to happen because of the logic of the buyers and the sellers. Okay? That's good. I think that's a good wrap for the class. I think I covered the material well, up to chapter 7, right? What is it? There's a lot. She talks about chapter 8, the dynamic trends and trend lines, which is this channel, right? Trading in a channel. Like no different, but don't focus on that yet, because if you can't figure out distribution, do you think you're smart enough to trade in a channel? Like I'm not here to offend you, but should you jump to that chapter and start trading in a channel when you don't even know what accumulation distribution works like? Okay, so just take a step back, focus on that first. But it is an important part of her book, because after it breaks out of accumulation, what happens? It consolidates in a channel. These are what? These look like flags. Consolidate, rip, flag, rip, flag, rip, flag, rip, flag, right? VPA confirms throughout. Low volume sell off in a flag pattern, right? Sometimes you're just like, this is a flag, guys. This is about to rip. How does Superbloom know that? How does TJ know that? Because there's no sellers in the flag, right? This thing is consolidating in the flag pattern, and there's no selling pressure. There's nobody dumping here. They're just waiting for an explosion of buyers to jump in. Okay, so that's that book. That's that chapter. Volume at price. Chapter 9 is volume at price, because okay, volume at price is a type of indicator. It's a tool. Okay, it's horizontal, and you guys didn't realize this. Okay, this is a tool on the horizontal side. You guys can get this in your tools too. But guess who? Guess who uses it? Guess who uses it? What do you think this pink thing is? What do you think this pink thing on my right is? You're right. That's the volume at price. I can tell at every single price level how many sellers are there or how many buyers are waiting. That's right. So that's in that chapter. And then she goes, right? That's her chapter. And then chapter 10 is the examples. Okay? So that rounds up the book. Okay? Actually, oh yeah, okay, that ends it. So at this point, does Vegas or TJ or Jim or anybody have any questions at this point and have any comments? It's the last class for a while. I don't know when I'll be back. So if you have any questions, post them now. While I look up this one cool video by Linda Bradford Raschke. Yeah, one sec. Is it this one? Okay, look at this chart. Just for an example here, this is Linda Bradford on volume price relationship. Okay, Linda, she's a market wizard. Okay, look at her chart. Look at her chart. This is her chart. These are candlesticks. See those candlesticks? They're bigger in size. They're wider in size because from the candlesticks, she's built some program that can build in. She's built in the volume. The candlesticks, if they're wide and long, they're validated by volume. If they're narrow and short, it's not validated. There's not enough volume there. Look at that's how crazy she does her volume analysis. Look at this Linda Bradford Raschke on volume price relationship. Okay? Okay, so that's that. Okay. Okay, so at this point, nobody has any questions? Do you have a site for charting? I use App Technician as one of my free sites. This one, it's free. I like it. The colors are there. It's pretty. Okay, wait. How do you read that volume? Okay, I trade. This is called volume. Okay, this is called VAP, right? Volume at price analysis. This is volume or volume profile, right? This is called volume profile. So look it up. It takes you like 5 minutes to learn to read it. No problem. You can read it. Okay, what else? How to differentiate between accumulation phase and no real buyer interest. Okay, that's a really good question, and I'm going to explain this to you. Okay, one. This is critical. Actually, this is okay. Okay, so here, let me write this down. Here, okay. There's actually two accumulation phases. There's actually two types of accumulations, right? Two types of accumulation. Okay? There's two types. One, no selling pressure. Wait, one sec. No selling, don't type anything, one sec. No selling pressure, right? No selling pressure at all. None. No selling pressure at all. There's no selling pressure at all. It's none. Okay? The second one is buyers are buying. Okay? Buyers are buying with little selling pressure. Okay? So there's a difference. The first one, there's like no volume. You're looking at a chart, there's like no volume happening. But if you spot that there's nobody selling here, you might want to buy some because there's nobody selling. There's nobody selling. So in the second one, there are buyers buying and there's little selling pressure. But every time somebody dumps, there's absorption of buyers. So there's actually two forms of accumulation here. But they both have the same rules. No sellers, lack of sellers, no sellers, and this is the most important one. Support never breaks, right? Support never breaks in accumulation. Okay, that's the golden rule. Support never breaks. Okay, so what else? Okay, I don't see any more questions other than the thank yous. Where can we find that volume at price? You link for the book. Oak can show you guys. The book is in the trading floor or something. Trading something. You guys could teach each other. I don't know, where is the book again? Somewhere. There's the book. Okay. Is volume profile good to understand now or advanced for us now? No, it's good. It's good. It's a good tool to use right now because volume, yeah, I won't go into it, but it's a tool to use to help you have an inside quote unquote inside look into the market. We're studying volume to understand the psychology of the market. This stock can go up because the buyers are buying and the selling pressure is gone. We want to see that in the volume, right? We're always looking inside the market. Okay, so what else? Okay, from unshelved stocks. For learning to read volume during live trading, do you suggest learning at a longer time frame interval and moving to shorter? Well, okay, if you're a day trader, you got to look underneath. The time frame has to be within the day, intraday. So it has to be like 5 minute, 30 minute, 20 minute, 1 hour, or whatever. If you take entry, usually people take it on the 2 minute entry or the 5 minute time frame for entry, or the 1 minute. Those guys are scalping, like really hardcore scalping with the 1 minute, right? So, but volume analysis is treated the same way. But there's a rule for volume analysis. Volume is more powerful an indicator the longer the time frame. And does that make sense, sir? Maybe you guys should write this down. Volume is a more powerful indicator the longer the time frame. Why? Because let's say over the monthly time frame, you see a big green volume bar. That means over the entire month, people were buying. That's a lot more meaningful than, wow, over the last minute, people were buying, right? Right? Does that make sense? Okay. Dragon Fund. After a sell-off and volume is increasing, price keeps dipping and volume dips. Do you enter the first green candle? Okay. So take one step. That question proves to me you don't understand how this volume works. Do you enter? And I can't really help you. That's your own trading strategy. Do you enter on the first green candle? That's up to you. Some people enter on just as it breaks resistance. You can enter the trade. Some people the first candle has to close over resistance, then they will take the trade. So that's confirmation, right? There's a certain amount of volume that has to come in, and then they'll take the trade. So it's all up to you. It's all up to the amount of risk you want to take, okay? It's only the amount of risk. Because, like, look at me. Sometimes I will buy under at 490. I'm buying in the buying climax, just like the book. I'm buying there. I'm taking the biggest risk. This is not even over resistance yet. I don't even know if it's going to break, but I'm going to take entry. Okay? Curious TV. Which time frame? So do I practice these concepts? For me personally, I use the daily and the 1 hour, but I'm able to break down all the time frames to get a better look at the volume breakdown. Just like the BGI example, remember? There's a reason why I showed you the BGI example. The BGI example, I used the left was the daily, the middle was like the hourly, and the last one was the 10-minute time frame. I wrote it in that notes there. Okay, I looked at all the time frames to learn where the buyers are coming in and what's happening at support. Is it breaking? I looked them all. I could have looked at the 5 minute, I could have looked at the 20 minute. Okay? Is that good? Helpful? All right, so tomorrow we put this in your toolbox. You are now a volume trader. Okay, I'm going to get off here. Reread that book again. Oh, I'm going to swing trade. Not going to day trade. Swing trade. Using accumulation. To tell you the truth. Okay, I'll see you guys in the trading floor, okay? I'm off. 1 hour. You guys owe me $30 an hour. Just kidding.